Hey guys, what is going on? Welcome back to my Robinhood portfolio. For this video, I'd like to go through and highlight some of the worst stock picks that I've had in the portfolio since opening it about 6 or 7 months ago. I did put out a video a few weeks ago describing some of the better stock picks, and in response, a viewer had asked, what are some of the worst picks that I have had in my portfolio? Either buy and hold stocks that have not turned out well, or failed day and swing trades. Essentially, stocks that I had bought with the idea of selling off, but unfortunately, the price of the stock may have declined and I had to hold that stock. So, I thought I'd kind of go through and highlight some of the worst stock picks as well as highlighting some of the better stock picks. You can see here the portfolio on the right has the cumulative performance since buying the stock and since opening the portfolio. There is a couple caveats I should point out. One is that I have done some day and swing trades with a few of these stocks, and unfortunately, the price of the stock that is listed with regards to the return here, I'll just kind of give an example here with SPHD. So you can see here the average cost is essentially calculating the overall return. But unfortunately, some of the stocks that I have day and swing traded with doesn't take that into account. They basically take the price of the stock that was first bought. So, for example, Ford. I have quite a few shares of Ford. I have been doing a lot of day and swing trading with Ford. But you can see here the average cost does not reflect necessarily the stocks that are still in the portfolio. What I mean by that is, for example, if I've been day and swing trading the price of Ford at $11.14 to $12, unfortunately, the price of the stock that is associated with the sold shares is going to be the initial stocks that I bought at maybe 12.50, 12.70, rather than the price of 11.20 or 11.50. If that makes sense. So the average cost here is probably off by quite a bit, but for most of the stocks that I do not do any day and swing trades, it should be fairly accurate. And the other caveat too is that I don't believe the portfolio is accounting for dividends with regards to calculation of the overall return. There's a few stocks here that have obviously done pretty well with dividends. One example here would be Pfizer, for example. You can see here the return is negative 64.90, but you can see on the bottom here I've got almost $60 worth of dividends, which is not calculated into the overall return of the stock. So I may have lost about 64.90. In this stock, I have not done any day or swing trade, so that average cost should be accurate. It's showing that I have the negative 2.08%, as well as the percentage here. But you can see, or you could see, that I had about $60 in dividends. So that's not calculating the appropriate rate of return there. Pfizer should be about even with regards to overall return when calculating in dividends. So just a couple caveats there before diving into the portfolio. On top here, as you guys know, I have my ETFs. They've all performed fairly well, all in the green here. 6.47, 4.98, 3.75, 1.67, and 5.83. So they've been performing very, very well as dividend payments associated with those stocks as well. Below that, pharmaceutical stocks. The best one there you can see is Eli Lilly, 27.8%. The worst stock would probably be Pfizer here. Again, this is about even. I did buy a significant amount of shares at $37. You can see it's trading at $33.88, right around $34. So lost quite a bit of money there. And Portola as well. You can see overall return negative 1,055. Again, this is a stock that I've done a lot of day and swing trading with, so that's not entirely accurate, but it is definitely in the red. So one of the worst stock picks that I've made so far. As I scroll down my portfolio, you can see Boeing there, 33.8% up. GE is down a bit, and this is also an accurate reflection. I've not done any day and swing trading with GE here. Down a little bit since buying the stock, but again, I have some dividends on the bottom here. Not a lot, just $3 or so worth, but if you calculate that back into the price of the stock, $4.28, I'm essentially sitting almost even with this stock as well. So not too bad. CNI, you can see there, very good performance, 17.43%. Unfortunately, one of the worst performing stocks in my portfolio is Ford, which is a significant amount of my portfolio. As you can see there, 2277 shares, just over $25,300 worth of stock. It's down about 9.44% here in Robinhood. But again, I've done a lot of day and swing trading with this. So the average cost is probably closer to 12. So I'd say I've lost at least 4 or 5% overall on that 25,000, which is a significant amount, but not quite 9.44%. This is the stock, along with Portola, that I've done the most day and swing trading with. Made quite a bit of money off my day and swing trades, but again, I don't think that is factored into the overall performance either. It's simply the stocks that are held right now with the average cost, again, calculated sort of in a serial fashion. So if I day and swing trade with stocks, let's see if this will open here for me. So if I day and swing trade, for example, buy at 11.14 and sell at 11.50, it's really going to take the price of the stock as 12.30 and selling for 11.50 rather than 11.14 and 11.50. So the price of the stock is off there a bit, but I'm definitely down on Ford. The worst performing stock in my portfolio by far is Target here, down 23.46%. Luckily, I only have one share of this stock. You can see $16.37 down, representing 23.46%. So it did not do great on that stock. Interestingly enough, that's a dividend aristocrat, so it's had great performance long term with its dividends. Yum Brands, this was a stock I was talking about earlier. Looks like it's down, but unfortunately, it's not factoring in the price of its spinoff, Yum Brands China, which was about $30. So really the price of the stock, the average cost is not $90.11. It's more like $60 or so. So I'm actually up on this stock if you consider Yum Brands China here, currently valued at, let's see if it pulls up here, $33.10. So really, I have broken even, if not up a few percent, with Yum and Yum Brands China there, YUM and YUMC. As I go down my portfolio here, pretty strong performance through my consumer discretionary, consumer staples. MS here, this is probably another stock I should not have jumped into. Morgan Stanley. Tried to pick up a dividend with this particular stock. Have not received a dividend. Down a few percent here, 6.2%, which is accurate. But again, only $5 down. AMD, this is another stock that is not reflected accurately, and I can kind of show you why. You can see on the bottom here, I did got a bunch of shares, 14,909.1, sold them off for 14,920. But you can see here, the last market buy is 21.18, 3 shares at 7.06. And I still have on the top here 3 shares, but its average cost is $14.89, which is completely incorrect. I've actually made about 50% or so on the stocks that are currently held here. So again, not really reflective of the overall return. It looks like it's down quite a bit, but it's not. AT&T here and very accurate numbers, but again, here you can see here AT&T. It looks like I'm down 769, but if we go down to the bottom here, I've received quite a few dividends here, almost $30, $40 worth of dividends. Actually, closer to 30. It's not calculated into the price of AT&T. With the dividends, I am in the green. Verizon here, unfortunately, another poor performance stock. I am definitely in the red here. But again, down $6.51. Only have $145 worth of capital in that particular stock, so not too bad. And as I scroll down here, you can see PSAC. It's been a great performer. I know I've put out a few negative videos about PSAC, about its unreliable dividends and kind of business model, which is sort of unsustainable. But you can see here a long track record so far in my portfolio of giving a great dividend return, as well as one of the better performing stocks, up 10+%. So that's done very, very well. And on the bottom here, SDR down 13.7%. But this is a penny stock. I only have, I think, about $15 or so in this stock. Yeah, 13, considering return negative to about $15 worth. So those are some of the worst performing stocks in my portfolio. By far, the worst one is Target, down 23%. Otherwise, most of my stocks have done fairly well. A few down 3 and 4%, like Ford there, down probably 3 to 5%. Don't know the exact amount, but it's definitely in the red. And since it has a very large proportion of my portfolio, it's definitely weighing down on my portfolio. So yeah, just about some of the poorer performing stocks in my portfolio, as well as highlighting some of the better returns as well. Let me know what you guys have done with your portfolios. Again, some of the worst stock picks that you have made. Very interesting to kind of know some of your guys' mistakes. You guys have seen a little bit of the mistake in my portfolio. Again, Ford, a lot of you have been suggesting that this is a poor stock, but I think over the long term, this will be a great company. It's a very profitable company. It's, I think, $4.5 billion in the green yearly. It sells 7 million vehicles, so it's got a great business model. Unfortunately, it's going to have a very poor 2017, and for whatever reason, investors just aren't very enthusiastic about Ford. So, lost a little bit of money with Ford, but overall, not too bad with the portfolio. Again, let me know how you guys are doing with your portfolios. Not to make the video too long, I will end it here. As always, if you enjoyed my videos, feel free to like, share, and subscribe. And until next video, we'll see you then.